Peter Pereira Gray, you are independent chair of the Property Investment Valuation Review for the Royal Institution of Chartered Surveyors. Thank you for joining us on BiTV.
Hello, thank you for having me.
A recent review commissioned by the independently led Standards and Regulation Board of the RICS, which you carried out, called for, and I quote, a stronger oversight and stricter rules governing property valuation. What observations or maybe findings led you to this call?
Well, thank you. I'm honoured to come on the programme, so thank you for asking me about this. The questions around valuation and the professionalism of those that are undertaking them have been in question for a number of years, and they particularly come into question at times of market distress. And we've seen over the years a number of challenges as to whether, in example, valuers move their valuations as fast as would be appropriate, depending on what's happening in the market. And so there's been a dialogue for a number of years about how fit for purpose valuations and the processes and the methodologies that are employed by valuers are undertaken. And so after a number of calls over some time, RICS, I think quite rightly, decided that it was appropriate to have an independent review. I was honoured to be selected as the independent lead of that review. And so I had a deep and careful look at this, and we had a number of meetings right across the globe with many participants looking at this question. We had over 180 pieces of evidence in from the research and the calls for evidence that we undertook. And the simple conclusion of that was that a number of people felt that there were improvements that could be made in process and in culture and in the management of conflicts around valuations. And so my report tries to draw those out and to make some constructive proposals for RICS to reflect upon with a view to how they can make the process of property investment valuations more robust. And so the report came out of the concerns. I reviewed those concerns. I think that there was merit in those concerns, and I've made some recommendations that I hope will allay those concerns going forward. And so that was the background.
And speaking of which, what are the main recommendations that could be implemented to solve some of those concerns?
So there were two or three fundamental issues which we identified, and then several other consequential recommendations that I felt needed to be made. So the first overarching view was that it's very important to have strength in an independent regulation and oversight and quality assurance of valuers. So I ought to say that whilst I took my lead from knowledge in the UK, this was for the benefit of global practitioners, and I'm hoping that the best practice recommendation that I'm putting forward will be adopted globally. But primarily this came from a UK review, and primarily it came from looking specifically at what we call the higher risk valuations. So those are valuations where members of the public are actually potentially going to make transactions and invest their money dependent upon specific valuations of properties. So those are, in example, where property companies have shares that are traded, for example, or banks are making loans to properties, and bank shares could be traded on the back of valuation evidence. So that first point of having it independently regulated is an incredibly important overarching principle. And of course, we're fortunate at this point that the RICS itself had identified that it needed an independent standards and regulatory review board. And so it had created it a number of years ago. And so I've made a recommendation that that standards and regulatory board takes a greater role in regulating and providing quality assurance for valuations for RICS purposes. So the second piece was looking really at the conflicts of interest challenge and question. The argument being is that there's an awful lot of people with their fingers in a pie that could influence valuations, whether that's clients or whether that's the valuers, and there are concerns about the working practices. And so a number of the recommendations that I've made as a package try to address this particular point. And perhaps the one I'd identify for your viewers is the recommendation that for the major multidisciplinary practices, there's a formal compliance officer role adopted in those practices. And so I'm trying to bring about the thought process that if one has very strong top-down quality assurance and one has strong bottom-up compliance, we'll have a much more fit-for-purpose process, and people will feel very much more comfortable with the outputs of those valuations. And so those were my two central overarching themes: top-down regulatory and quality assurance, and bottom-up better practices and standards and overseen by compliance officers within multidisciplinary practices.
Okay.
I did, however, observe on the journey through that I felt that as one looked at particular issues around independence of valuers, particular issues around rotation of valuers over time, and assuring the recipients of valuations and those that would observe upon them that the process was robust, I felt that the RICS would do well to look at its cultures and behaviours as an overlay to how we looked at how we brought about the regulatory top-down and the compliance bottom-up. And so there are also recommendations in my report as to how that might be done. The final thing I would say to you as a key recommendation is that I am recommending that valuers adopt discounted cash flow methodology as a valuation, as the primary method of valuation, where it's appropriate to do so. Clearly, I'm not suggesting that in relation to houses and where there's lots of comparable evidence and the like. But for those high-risk valuations, where those that are in the market transacting and buying based on DCF methodologies and the explicit inputs which come from them, we need to move to that in the valuation profession so that we can explain to our clients exactly what went into the valuation and how it's been thought of. And as a means of coming up with what I define as the exchange price, which is the valuation that I'm looking for valuers to confirm. And so it's quite important to distinguish between exchange price, which is what the valuer is asked to do, and the forward look or the risk analysis of the options and the scenarios that could occur. A valuer is asked to assess what they think that exchange price will be, subject to a number of assumptions. And I believe for the high-risk valuations that is most appropriately done using discounted cash flow methodology going forward. And so I'm aware that's of great interest to the profession that I've made that recommendation. But those were the four things that I would particularly draw out for you.
Okay, thank you. And speaking of professionals, what would such a process entail for Europe's commercial real estate sector and for real estate professionals?
So that's a great question, and I think ultimately it's important that we recognise that what I undertook was a global review, and so the RICS, with the standing it has in the world, is able to have a dialogue with all regions of the world, not just Europe. There are a lot of professionals working with RICS membership in Europe, and they're all to be respected for that. But the report that I've made talks in many areas about where I believe best practice would sit, and that takes into account the practices in other professions as to how conflicts of interest are managed, and I looked at the medical profession, I looked at the audit profession, for example, and I've made those recommendations for the RICS and therefore for all regions of the world. And I recognise that there are local practices, but I would ultimately hope that those best practice recommendations that I've made to RICS will filter out and come across to all regions of the world, including Europe. And so for example, that discounted cash flow recommendation that I've made, I would hope to see European practitioners adopting that over time, having regard to the guidance notes that I'm sure the RICS will bring out in response to my recommendation. But I'm very hopeful that across Europe and actually wider across the globe, we'll move to that greater understanding and transparency and clarity that comes from discounted cash flow methodology, rather than some of the historic mechanisms for valuation that have been used in different regions of the world. So what does that mean in practice? Well, it means in practice that we know that property is a very local asset, and so ultimately I would expect practitioners in the major cities to be guided more strongly to adopt those recommendations than perhaps it might be in regions and in countries per se. But I would hope that all practitioners that are taking account of RICS recommendations in this report will move to and will adopt the recommendations that I'm putting forward, because ultimately I believe that right across the globe, the valuations that come through will be seen to be much stronger and will be fit for purpose and will give society the confidence in what has been done. So I hope that Europe will see this as a constructive contribution to their own practices, just as much as the UK is thinking about what I've put forward today.
Great. Well, thank you very much for your insight and for your time. And thank you all for joining us. See you soon on BiTV.